U.S. stocks are set to end the week around 1% lower as investors reacted to Trump's global tariff uncertainty at the start of the week, then more AI uncertainty at the end of the week, even after Nvidia beat forecasts for a 14th straight quarter. So what will investors be watching for the week ahead? To talk us through this, I'm joined by Global Head of Content, John Kicklighter. Thank you for joining us, John.
Thanks for having me.
So, John, we've seen some weakness this week in risk assets, but US stocks, for example, have held within the sort of broader range. What conditions are you expecting next week, and which markets are you going to be watching?
So these markets, I believe, are in still a two-speed kind of setup, where you have the congestion that you mentioned in U.S. equity indices, and it's an extended period, and they're holding back from significant declines and barely escaping key technical breakdowns. And then, on the other hand, you have other risk-oriented assets that are doing quite well, like emerging market ETFs, or you look at global indices, like the VEU ETF, which is a rest of world equity index. And you can see that performance is in direct contrast. However, remains the skepticism that is anchored in that big picture performance that you expect for U.S. indices to play kind of a leading role. So even though you can have these disparate performances, it is casting a cold pallor over the markets where they're not really convinced, and it's more of a chop higher rather than a unbridled, ambitious build into like the spring trading condition. So it's keeping tabs on that, watching some of the seasonality considerations. We do have expectations of volume to continue to pick up following some of the holiday week. If we look at the averages around volume for benchmarks like the S&P 500, volatility also tends to pick up into the coming week. We also have a pickup in scheduled event risk. However, some of those dark cloud gray swans seem to have ebbed into the background. They're not totally gone for sure. We could absolutely have an update and some of the tariff considerations from the White House. We still have the uncertainties around Iran in the United States, and we could still see some blowback from other gray swans like the Japanese uncertainties. But it seems that the markets are more dictating price action through technicals or dictating price action through scheduled or traditional financial event risk. So in that kind of backdrop, from a market perspective, I would be more oriented towards range or short-term breakouts. I would be secondary or at least more critical of looking for trends, particularly bull trends, where it's a risk-on orientation. You have to really weigh, if I'm going to add here or get in here, for sure, if you're not already in, you have to really weigh that risk-reward consideration. And in terms of markets to watch to kind of set that tone, definitely watch the VIX Volatility Index. If you're watching volatility, though, you can also watch crude oil. The oil volatility index is very high, the highest it's been since back in June of last year, when the United States actually did attack the Iranian nuclear facilities. Watch U.S. equity indices like Nasdaq, but I'd watch it more in the context of that AI trade, the Nasdaq to the Dow ratio, or watch the S&P 500 relative to the VEU to see how progressive that sell U.S. trade is. And there's also a lot going on with the dollar, nice technical wedge or technical triangle, which makes for interesting currency crosses like the Euro USD, the Pound USD, and the Dollar Yen.
And then what about themes? What themes will be in focus in the coming week?
So the themes are probably going to be a lot more in the scheduled event risk, which is also going to translate into less probability of a really significant traction. So if you're looking for that, if you're waiting for that breakout for the Dow or the Nasdaq or the S&P 500, it's going to be more difficult for it to occur in the coming week, given what we have on tap. We do have scheduled event risk. The traditional themes are going to be probably in order of importance: Friday's non-farm payrolls, or some of the GDP-oriented signals. We have a lot of manufacturing activity reports that are worthy of watching. But if you're looking for the systemic themes, the outliers or the gray swans with the intense potential but the lower probability, Iran is probably the U.S.-Iran conflict or uncertainty. It's not conflict yet. Is probably the highest order of uncertainty. There's also, as I said, a probability that the tariff considerations are stirred, with the White House combing through its options post the SCOTUS strike down of their previous efforts. And I'm keeping a very close tab because it seems like the U.S. Treasury Secretary is also keeping a close tab on the Japanese yen and Japanese financial system, because that has, it seems, a lot of potential, and just keeping close tabs on that sell U.S. pressure. And if you see the U.S. dollar sink or U.S. equity sink, that theme continues to play out. But if you have a sudden rally in the U.S. dollar, that's probably going to signal to me that there is a more acute risk aversion. So that's always a really important pressure gauge to keep tabs on.
And then thinking about event risk, I mean, we've got the non-farm payroll report in the coming Friday, but what else will you be watching next week?
So taking it day by day, I would say Monday I'm going to see how the U.S. Iran deadline, so President Trump had a deadline on Saturday, how that plays out, extended time, obviously, or if there is a movement of military forces. But aside from that, you have some Chinese manufacturing data in the early Asia session, Mexican business confidence, so seeing how the other key trade partners from the United States are doing. And we have a run of manufacturing data from the U.S., the ISM manufacturing report, Brazil, Canada, Mexico. So a good America's overview of manufacturing health, which is important, obviously, in these trade tariff-oriented times. Tuesday, you have Japanese Q4 capital expenditures, very important for their financial uncertainties and the pressure that we have between Prime Minister and the Bank of Japan. See that play out. In the UK, we have the spring budget. We'll see if there's any fireworks like there was last budget. We have some U.S. Logistic Managers Index. I think that's important for measuring the general tariff fallout health. But I'll also be watching the Brazilian GDP report, a key emerging market country, BRIC economy. Wednesday, Australia GDP, Chinese PMIs, Japanese consumer confidence, a busy Asia session. South Africa GDP. We have the U.S. Private payrolls from ADP, so a precursor to the non-farm payrolls, but the really big one on the U.S. Docket is going to be the ISM service sector activity report. Not a huge market mover, but very indicative of timely U.S. GDP. So definitely one to watch if you want, or if you're keeping tabs on the last vestiges of earnings of the season. We do have Broadcom after the close. Thursday, we have the Japanese FX reserves. Important, again, keeping tabs on the fringes of the Japanese financial system and its uncertainties there, because it has a disproportionate influence on global economic health. But Australia trade balance, UK inflation, and US import-export inflation figures, those are certainly trade-oriented, but also the monetary policy consideration. And then Friday, we close it out with China, with the Hong Kong and Swiss FX reserves, important backdrop to how capital is flowing around the world. But really, we're going to be watching, I think, the U.S. session with retail sales, consumer credit, but really a focus on those non-farm payrolls, because we're not far out from the next FOMC rate decision, with a lot of controversy that will come back into play as we get closer and closer to that next event.
Thank you very much for your analysis once again, John.
Thank you.
For more videos like this, please do like and subscribe.